Hey, Joanne. How are you today? Very well, how are you? Yeah, very good, thanks. So we're here today to talk about the world of private debt.
Yes, we are.
The private debt AUM is predicted to increase at a compound annual growth rate of 10.8%, reaching an all-time high of $2.3 trillion by 2027. So, Joanne, why do you think private debt as an asset class is doing so well amidst such a challenging macroeconomic environment?
Private debt is fast emerging as a really hot asset class. According to Preqin data, it is one of the assets that have grown steadily since 2018. There's probably three factors leading into that. Factor number one is increase in interest rates and growing inflation. That has meant tightening on financial conditions for people wanting to borrow money and making it more difficult for people to borrow. Number two, the aggressive macroeconomic background is making it challenging for investors to hedge against their inflation exposure. So the floating rate aspect in private debt and credit allows them to hedge that exposure. Borrowers are also negotiating better covenant positions. Number three, from a borrower perspective, the credit and debt asset is very customizable, allowing for a longer duration and matching the profile of the asset to the investor's needs.
And can you tell me about some of the operational challenges that private debt managers are facing at the moment?
At IQEQ, we have a growing client base of private debt managers. One of their main challenges is around the calculation of interest, as it can vary in complexity depending on what's set out in the limited partnership agreement. Private debt managers also need to consider factors such as compounding frequency, the accrual methods, and any additional fees or charges that may impact on those interest calculations. We're seeing a lot of clients doing those calculations in Excel, and it takes a lot of time, and it's also prone to a lot of errors. Strategies, accounting, analysis, and reporting, they've all become more and more complex.
And could technology be a solution?
Absolutely. The complexities are driving the need for technology platforms that allow private debt managers to efficiently deliver insight and reporting while developing ever more efficient business models. At IQEQ, we're using leading technology and have developed our own proprietary platforms to best automate and streamline processes to minimise manual processing. And for debt managers, we've entered into a strategic partnership with Allview, to which IQEQ's private debt managers and our CLO clients can leverage the Allview investment accounting solution. This allows them to automate their processes across the entire investment lifecycle, with straight-through processing into our fund accounting platform. This offering enables our clients to automate the whole loan administration process, including note calculation and reconciliation. Allview also allows IQEQ to provide our loan agency and private debt loan administration services, covering a range of asset types, including, but not limited to, senior mezz, broadly syndicated loans, private debt loans and bonds, and corporate and municipal bonds. It's a real game changer. What's more, we've just launched our own data platform to which we can deliver the data we administer to our clients directly onto their in-house system, fully automated, digital and structured, so our clients don't have to go scrambling through those multiple Excel files or folders to find the data that they need.
And finally, Joanne, in your view, what are some of the key trends impacting this asset class?
Market volatility is creating opportunities for private debt and credit managers. Volatility is also leading those larger asset managers to reconsider their operating models. There's growing client interest in driving efficiencies by either restructuring their back office or switching service providers or considering lift-outs. Asset managers can make their operations more efficient. They can strategically identify and separate the non-core activities or functions from their main operations. This allows them to focus on their core competencies and allocate resources way more effectively. At IQEQ, we've worked on a number of carve-outs recently, and this is a trend that we're really seeing in the market at the moment, and we're seeing it across all different asset classes.
And thanks, Joanne, that's been really useful. So how do people find out more about private debt?
Log on to iqeq.com and reach out to us to have a chat about how we can help you.